Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I'm just going to go over, of course, the pumps that we've been having in the market. If you've been watching my videos, that I've been bullish since basically 18K, and of course, I'm going to continue to be bullish until the trend tells me otherwise. Guys, you don't need to fight the trend. Like, everyone gets freaked out, they allow all this FUD to just seep into their brains, and even though I'm one of those guys who have been extremely bearish since, 62 to 59K when I exited the market, I have been reminding you guys that you can't be perma bears, you can't be perma bulls, just to be intelligent, little alpha monkeys and trade what's on the chart. As you can see, we do have a continuous sea of green in our crypto bubbles. I mean, we have some lovely players just like Rose, LDO continuing to make moves, YFI just trying to catch up, FIL. Filecoin, that one was one that I really wish I had caught. It had just a perfect, like just a pristine, perfect setup. And if you had caught that in advance, man, that would have been a good play. But yeah, we're always going to have regrets about the ones that we missed. But there are a lot of coins that haven't really popped off yet. And right now, you see kind of a race for the money in the market to try to pump certain coins before this all turns around. And so the question is, when is it going to turn around? And as we approach the end of the month, one thing that we need to consider is that we got some pretty bad news on Friday, right? On Friday, we found out that actually, inflation is increasing, still faster than what the Fed wanted. And we're not even getting to just break even points. This does suggest to me, guys, that in September, the Fed may have to be more aggressive than what you think. Now, guys, again, like these things are all lagging indicators, okay? That's what I was talking about last episode. I know, talking about the politics of inflation and talking about the politics of recession, always strikes people the wrong way because we just have, this gut instinct to reject whatever people are saying about it because the media has just talked down to us and politicians have just talked down to us continuously for our whole lives as we face these type of points in society. But you have to understand, we have to be able to have honest conversations with each other. And so the key point here is that, of course, GDP is contracting. We all knew that. We all know Jerome Powell was late. We all knew that the Trump administration was pumping the bags of billionaires and the stock market at the expense of the middle class for way too long, all the way to the end of his administration. And then good old Joe Biden just picked up where Trump left, and these guys are all in it together. Pelosi, Biden, Trump, McConnell, and also, of course, our dear lovely Jerome Powell. And these guys are all thinking the same way that the Federal Reserves and all these transnational billionaires and the class of investors that donate to politicians. I don't mean you and me, I mean the guys that really heavily donate to politicians and they get policies changed. The stuff that Trump bragged about, the corruption that Trump bragged about, that he said he did for decades, is what all of these guys are doing in these circles. And so it's just one love nest of lizard people just pushing all of the expense on us. And look, it's happening again, okay? The, although we are glad that this number is like 1%, and it's not like 2% or 3%, because it could have gotten crazy. It could have gotten into hyperinflation territory, right? If we had been doing nothing with the interest rates. If the Fed hadn't pivoted and started increasing interest rates, these numbers would be so extreme that it would make, your face melt, right? I mean, we would be dying over here as just hyperinflation would have kicked in. And so when I say something like the Fed's policy is working, what I mean is that it's slowing down the rate of increase of inflation. And I know everybody's going to get super political and everybody's going to have a feeling this way or that way about it. But what the Fed is doing is working to the extent that, our civilization is not going to be destroyed by inflation. I am not saying that they are ahead of the game, and I'm not saying that they are doing a good job. I am the number one critic of these guys for the longest time. I have been talking about inflation and interest rates and the Fed for the last 9 months, whereas other guys were just focused on little TA charts trying to figure out good value zones to buy coins. I was saying that we were in a macro cycle on stocks and in inflation and in all of these things that we would have to watch out for, and that's why I was so bearish. But now that we're at the end of the bottom, I would say bottom third of the market, we have to leave the possibility open for things like relief rallies, potential bounces during summer, and then we have to revisit these concepts come September, right? And then Q4, right? Q3, which is, we've obviously entered Q3, but we haven't experienced Q3 yet. Q3 is going to be about, how deep does the recession go? And one of the problems is because we didn't get ahead of inflation, because Jerome Powell couldn't get off his ass and do the things that were necessary to be done early enough, we are probably going to be experiencing a recession at the same time that we're going to be experiencing, this type of hard inflation, right? And because, of course, part of the recession is contestable. In other words, are we just deflating the bubble, right? The exuberance bubble, the trillions and trillions of free money dumped into the market bubble? Yes, we're doing that. So if we've measured like GDP drops and recession for the last couple months, that's mostly related to the bubble, the artificial bubble that shouldn't have ever been there to begin with, deflating. And that's a good thing. We don't need the economy to be that overheated. The problem is for real people are going to experience that. But the state, right, the state of the economy could have been kept healthy even if you remove a bubble. But by being too late, and as we head into the end of the year, what's going to happen is we are going to have a crossover with the real economy and with the bubble economy, where both of them are being impacted in a very serious way, while at the same time inflation is going to be rising. And that's what people talk about when they talk about stagflation and all of these problems. And then we're also going to have these deflationary forces in the world where there's also a demand for dollars, and we have inventory building up in the ports, and so we're going to see some very strange dynamics coming to fruition over the next half year, and we have to stay on our toes. But in the meantime, you enjoy these bounces and you take your profits, you sell whenever you have a chance into the green, because these type of rallies can be sucker rallies, and you sell on the top, you sell on the bounces, and you buy back on a nice 10, 15, preferably 20% retracement, and then you sell again as soon as possible if you are even going long, if you're not just primarily shorting in a macro downtrend, right? So guys, all of this stuff is pretty bad news. It's nothing good, but right now bad news is good news for the stock market, because from stock market logic, you can't go too hard if you're the Fed, because you might crush the economy. Do you understand that logic? If the Fed goes too hard, then you can crush the economy that is getting more and more fragile. And so we're at this weird point. We're at this crossover point where the market actually likes bad news for the real economy, because the market thinks it can benefit by the Fed going easier as it tries to basically handle with care the real economy. And so, guys, just to be aware that we're now in bizarro land territory, okay? This is the realm that we are entering into, the doorway into stagflation, and we don't know how deep it's going to go, and it's going to be a very, very, a fine balancing act. And I'm not sure that Jerome Powell is up to it. He's actually the guy who pretty much got us into this mess, but we are the ones who have to deal with it. So guys, please take advantage of any bounces on the charts and then sell whenever you get a chance, whenever you reach resistance, whenever you get a nice pump of 10 to 15 to 20%, just to sell into profit and take your money and put food on your table and try, if you can, to have 9 to 12 months of savings, because we are also entering into a world where China and Russia are being super aggressive in ways that, great powers aren't really that aggressive, to each other since World War One and World War Two. And if you guys think that history has stopped and that World War Three isn't possible, again, you know, get with it, because history doesn't stop. Okay? We have seen, dramatic changes in civilizations every generation, right? At least every 2 generations. And I gotta say, at least from the Western civilization perspective, things have been pretty easy going for the last 1 generation. So is it this next generation? Is it our kids' generation? Is it starting now that we're going to really be facing those moments that can be highly transformative and very, very challenging, you know, at some point? Maybe not this year, but maybe next year or in 5 years. You guys might want to start building a savings nest egg of at least 9 months to 12 months, because the world is getting more volatile. It's not getting less volatile. It's getting more volatile. And you guys are gonna want, this should be your goal for trading, is to have that 1 year of savings in case, the stuff really hits the fan in the world and the world goes chaotic. These big powers are not messing around, and neither should you. Okay, this isn't fun and games. This is for your future. And when you look at inflation and you understand how sticky inflation can be, you also want to be able to afford that future. So don't be holding on to these coins. Don't be quote unquote investing or hodling or any of that stuff. You get a 10% retracement, you can consider to buy in if you're at support and there's some logical reason that you could be at support, right? Some confirmation of a bounce or something. You get a 10% to 20% bounce, take some off the table. Just take your profits. Guys, this isn't financial advice. I'm talking to myself in a room right here, but I think a lot of you guys also could benefit from hearing this, right? And you take it off the table while you're in the green, right? Same thing, right? Look how many times you could have done that, right? There was no confirmation of a bottom. We started to bounce around, right? We got a confirmation of a bottom. You don't necessarily have to play the falling knife, but when you made a higher low, right, it looked like it was a pretty good place to buy in. You pump 10 to 20%, you take your profit, or you even consider shorting if we turn around. We come back down to support, make another higher low, it's a good place to buy in. We pump 10 to 20%, you take your profit. You see what's going on here? This is what smart people are doing. This is what the smart money is doing. We drop 10 to 20%, we find support, right? It's another higher low. Guys, we're in an uptrend. You buy again, and then you do the same thing, and you take your profit again, right? You see this channel I have marked out here? Right, you see these white zones? Like, this is where we sell and this is where we buy. And I've been trying to instill, these values into you guys as my audience here, just because I think a lot of you think that maybe you should just buy here and just hodl. But what's going to happen if we just have some type of, major, global war incident? Or what happens if there's another like flash crash because of some monkeypox or some stupid thing like that, right? And then the market just has a flash crash and there's maybe your stop losses don't even get hit. There's no liquidity, there's no buyers or something like that, right? You have to be very careful. You got to take your money when you can take it. You got to put food on your table. You got to increase your savings, right? And so, try to have these zones in your mind. If you see a channel that's tradable for you, then just go for it. Go for it. You. I don't understand like what a lot of people are waiting for. Why they were so afraid when we had higher low, basically neutral, higher low, right? And higher high, and now another higher high. Like this is an uptrend. This is an uptrend. But there's going to be a limit to it. I mean, at some point, it's probably going to turn around in a very serious way because we are in a macro downtrend, right? We're in a macro downtrend, right, guys? Like this thing has just been like just getting smacked down. And so could we go down one more level? Yeah, we could. I mean, I only can suggest that we are in, the bottom 1/3 of this. We're not in the upper half anymore, guys. Like we're in the bottom 1/3. We either hit the bottom or, it's like a 1/3, left to go. I mean, those numbers can be highly variable depending upon, the craziest stuff that could happen in the world. But assuming nothing crazy happens and that it's just everything is as it is, then probably we're in the bottom third. And the bottom third is usually a pretty safe place to buy. Now, it doesn't mean that you can't lose everything, right? But it does mean that it's much safer than if we had been buying up here in the upper half, right? So you should be having more confidence. A lot of people were super willing to buy up here. Like they were just so excited to be buying up here. You should be pretty excited to be buying down here. And if you're feeling like you can't trade, even though you've been trading, right? If you traded all the way up here, you should find that inner confidence to trade, okay? Don't do anything that you're not capable of doing. Again, I'm not giving you specifically financial advice. This is like a self pep talk, and if anybody else can benefit, great. But I'm not giving you specific advice, okay? This isn't personalized for you. But look at this pattern that we have on the chart here and tell me, like, do you want to be buying right here? Or would you rather be buying down here, or at least on some type of mid-channel pullback, right? If we look at Bitcoin, first of all, since the last video that I made on trading Thursday, we did end up pumping, 3% on Bitcoin, right? Something like that from where we were, 3%. Okay, so you saw that title bullish, right? But I knew that we were going into this channel's resistance, and we were gonna have to break above that. We're gonna have to get out of this channel if we're going to get super bullish. Okay, and then there might be a limitation at maybe 25,000 or maybe 26,000 or maybe 28,000 or maybe in this 30,000 area, okay? Or we may just like bump up and like chop around on all of them if we continue to like break up. But we have to break out of this channel to do that. And since we haven't broken out of that channel, we should just assume that this is resistance. And as soon as we got these wicks, into this diagonal here, right? You can see the shortest one was right here, barely touched it. And then like the most aggressive ones, they got to the top of this channel, right? This kind of zone rather. This one just kind of skirted it. So you could have taken your profit there, but we pushed into it again. You can't necessarily count on it reaching the top of that zone. And so this is a good place to take some profit. It doesn't mean that this can't pump up more. But, are we traders or are we like just George hodlers, right? Like, do I just want to hold on to this crap forever? Even if there's a nuclear war, am I going to feel happy that I'm holding Bitcoin during a nuclear war, right? Or do I want to have money so that I can buy, food? Okay, I'm being very extreme. I don't think that that's going to happen. I'm just saying you don't know what can happen in the world. And so would you rather be making profit or would you rather just have a whole bunch of virtual coins that you can't eat or anything like that. Okay, I'd rather have 9 to 12 month savings, right, rather than collecting every coin that people tell me is something that I need to be collecting. Okay, and so that's why I'm going to be buying here every time, and I'm going to be selling up here every time as long as we're in this channel. And if we break out of this channel, I'm going to have to figure out what our next channel is, right? Or if we use this as support, maybe then I'm going to have to, decide to use that as my buy-in spot. If we confirm it as this breakout having support. But so far we haven't confirmed anything like that. We haven't confirmed anything at all like that. We are just in this channel moving up bullishly. And so for the last month or so, I've been making bullish videos. And I told you I was bullish on Thursday. Some people didn't want to believe it, but we pumped another 3%. Right? Let's look at how our coins are doing. Oh, look, ADA, another 6% up, right? Of course, we got a retracement, but that's up to you. You guys have to sell, right? Look, this is our resistance zone. We knew that this zone like topped out right here, kind of bottomed right here, right? We're at the top of that. You see this box? You see this gray box? We're at the top again. You take your profit in the top, in the upper 1/3, right? And then you come back to your support and you buy in here. And so when we came back to our support, either here or here, ish, and especially right here, then that was a great buy-in point because we flipped this resistance into support. And so, of course, this isn't going to pump forever. We discussed this. It's probably going to bounce around a couple times, just like it bounced around a couple times here. And so when we're doing these like ADA trades or whatnot, right? If we get a rejection from the top of the zone and we don't just push through, right, and go to heaven, right? Our goal, our hope was like 66 cents, but we knew this was going to be, pretty solid resistance in this zone. So if we got pushed back down, then we buy at support and we try again. And so that was what? That was 12% the previous one, and then plus this 5%. That was a nice 18% move, right? Let's see, a nice almost 25% move, right? If you had like bought in using this principle, because it basically hit our line perfectly, like almost like literally to the dollar, like it hit it, right? Hit it here, pretty much hit it here. Oh yeah, yep, there's a wick right there. Yep, that blue wick right there. And so yeah, I mean like this line has been hit almost precisely, and if we had come back and used it as support, that would have been the perfect buy-in spot, the perfect confirmation, a higher low and a bullish retracement, flipping resistance into support, and then that would have been a 25% move. Don't tell me ADA wasn't a good play. ADA was a great play. Like we did a good job, Alpha Fam. Like that was a 25%, let's just say 20 to 25% play, and that was a good job. And we could have done it 3 times, with a maybe 10% here. This one was like 25%, this was 20%. Same thing KDA, right? Same thing with KDA. We had kind of this line right here. Maybe my line's a little bit off, but these things are zones. They're not really like straight lines, right? So one thing that I'm going to try to do is switch to using these kind of boxes instead, because it kind of shows more of a zone. And so what we did is like we fell into the zone 1, 2, 3 times, right? And but KDA kind of like was chopping around it. It didn't really launch off of it. So this was a little bit of a fake out here. This was a little bit of a hardship for anyone trying to figure out where was Kadena going to come back to. But the thing is that we had a clue. We had a clue in this bottom trend line right here, which is that if we don't want to buy in on the mid channel necessarily. I mean, unless you want to take a really high risk, right? But we don't necessarily want to buy in on the mid channel. We want to buy in at support. Where's support? Right down here, right? 1, 2, 3, and then you could pretty much expect that the next one was going to be right here. And look where it just had a super pump from. Let's see, it was 16% last time we checked, and then it went all the way up to here, so it was 30%, 30% gains on Kadena if you just followed some simple logic, right? Don't buy at the top. Don't you can take a huge amount of risk if you buy the mid channel. It's just like buying in the middle of nowhere, but Some people do it successfully, so I'm not going to knock you if you do that. But and sometimes I do it also, but there has to be a reason why. This wasn't a really great reason why. And but if you wanted to just to be ultra conservative, you don't get back in until you hit your main support here, which was spot on the money. It was dead on the money. Like this stuff works, right? If you use the most conservative principles, yeah, maybe you're going to miss a trade. Like sometimes it does pump from the middle. Like it only like retraced to the middle here and then it pumped back up, right? But you can see it eventually came back to this line. And so overall, you're going to be much better off if you stick with simple principles and follow your principles than if you just try to take more risk or you feel like you're missing out on something, that sort of thing. And then what? You sell every time you get to this line. So, we started to make higher lows here. You could sell, at the resistance. We already saw resistance here and here. You know, we were able to sell here. There was a wick right here that we sold. There was a wick right here that we sold. And then we waited for retracement. And then there was another wick. We had a pullback. This one didn't come back down to support. It just came down to the mid channel. But anyway, if you kept in your trade because it didn't really hit the top of the channel, then you could have made as much as 30% on this move. So, that's just what it is, right? Very sloppy kind of pattern through here. But in general, you can see that as long as you only bought on this line, and it was a very clear line, and if you were selling at the top here on this line, right, then you could have made a ton of money. And it's just that the reason why we can make a ton of money is because almost no one sticks to these principles. They just, you know, they just get scared or something, right? They get scared or they get greedy, and so they act too fast. But guys, yeah. So I mean, look, 30% on Kadena, and then Zilliqa, of course. And again, all of these coins are having retracements, but it's up to you to take your profit at these type of resistances. You can see right here, there's another zone that we have, right? There's this zone right here, and then there's this zone right here. And where did I suggest to buy in? Right here. That's where I suggested to buy in for Zilliqa. And so then the obvious place to take profit is going to be up here, right? That's how easy it is. That's how easy it is. You're not going to be 100%, but you stick to some basic principles and you don't get greedy. Like I did. I accidentally bought in here because I got greedy. I saw my friend in this trade and I wanted to catch Zilliqa before it just popped off, right? And I don't know, maybe I bought in over here. I made a boneheaded mistake. TA, technical analysis is not the same thing as trading, right? Trading, you have to master your emotions. You have to make sure that you stick to your principles. You have to actually push the button at the right time, right? You have to push the buttons at the right time. But for technical analysis, we can see what we need to do, but executing it, doing it the right way is trading, right? And so we have to master both of those things. And I can say I'm better at TA than I am at trading. And most people are like that. Most people are like that because it's harder to trade than it is to look at a chart and just make some theory. Because at the end of the day, you don't really know what's coming next. You only have a hypothesis on a chart, right? But look what we got. The last time I checked in with you guys, right, we had pumped somewhere around to here. So we got about a 10% move, and now we're up to like 20%. But we entered in that profit-taking zone. So I hope you guys are taking profits because you never know how these things can turn around or that they can even dump. Let's go over to Bitcoin. I did update all of these lines. And so as long as Bitcoin is holding in this zone up here above like 23,500, super bullish still. I mean, we could even have a drive higher to 25,000 or something, right? 25,500. I have no idea. We could have another drive for sure. I mean, especially if we stay above this 23,700. I mean, if we just keep our 2-day Stokes turned up, I mean, we could have another drive up. But it is becoming the end of the month, and there's a couple reasons I'm going to suggest to you why we could potentially have a pullback. But you can also see it in our channel. There's a potential for a pullback here. Maybe we could come down as low as like 22,500. I would hope not lower than like a 23,000. We would stay super bullish if we stayed above 23,000. Like this area of 22,700 and above, like a retracement back to this area would be very bullish. Okay, like we could do some spectacular stuff if we just bounce off of this area. But if we start breaking under 22,000, then there's a good chance that we could, come back lower, right? And then we can be very much in danger of breaking things. If we start breaking these things, then we could even have a dump. So for me, I personally don't want to be playing in this market long if we're below 22,700. Maybe I'll consider a wick and then some type of a higher low off of that wick. But for me, that's a very big red flag. And as long as we're above this 23,500, I mean, we're just bullish, guys. Like, what can I say? What can I say? Let's go to ETH. Same thing. Same thing. We're just chopping around in this resistance. We're trying to break all these wicks and break all this resistance. The most bullish thing that's possible, right? And so since the last time that we checked in, we had a 3% pump on ETH also, and then it retraced. But, that's trading. You got to take your profit when you take your profit. The key point is that when we had that pump, right? And again, guys, remember, this was our buy-in, right? So our buy-in was a 30% increase on Ethereum, right? This is where I was telling you guys to buy in. That's why I had that green line there. This was the buy-in area for us, and it nailed it to the dollar. Nailed it to the dollar. 30% increase. Okay, like we are doing a good job, Alpha Fam. Like, thanks for all the discussions in the Discord, and also my friends in the AR Collective and all that stuff. You guys are just making wonderful senses of community. And I know this market is really hard right now, but in the next bull market, like we are just going to kill it. We are just going to kill it together. You guys are all doing a great job. I mean, people are making 30% in a bear market. Okay, that's amazing. That's amazing. Okay, and it takes guts. It takes some bravery. It takes some risk. That's okay. Don't put all your money into it. And don't forget to take money off the table. Always be selling. Always be taking your profit and put some back into your savings. Okay? You don't need to hodl these coins. These coins hate you. Okay? They hate you. They are doing everything they can to wreck you. These coins want to wreck you. They aren't loyal. They don't care about you. You don't need to hodl them like they're your babies. Okay? It doesn't matter if Michael Saylor or whoever is in love with Bitcoin. Who cares? Who cares? Okay? That's like propaganda to pump his own bags. He doesn't care about you. Let's see. Yeah, I mean, I would be bullish on ETH if it had a retracement down to 1650. Maybe a little bit of a wick lower would be okay. We got a little bit of this kind of like area here that could potentially be bouncy. And wouldn't want to see us going much lower than that. We would break a lot of things that could kind of send us back down to this area. And then if we broke 1350-ish, we start to break a lot of stuff. And if we get below, 1300, I mean, it's just kind of game over to the bottom of this thing. So pretty much similar warnings. That's why I didn't make an update, every day. Sometimes it's just the same thing playing out. But again, we have the end of the month coming up, and I'm going to show you guys, what is some risk here. What are some of the risk? Okay, first of all, you guys know I've been going over the VIX for like months and months and months. A lot of people are just catching up. I've seen a lot of YouTubers and a lot of gurus adding the VIX to their repertoire. But guys, I've been using this for like a year, and it's just funny as how some people are just catching up, you know? This is one of the most important charts that you could be looking at in crypto, and it's for stocks. Okay, the VIX is for stocks. It's the volatility of the S&P 500. Use it. Yeah, use it intelligently. And under 24, it's pretty easy trading, guys. Under 20, it's ideal trading. Between 20 to 13, it's ideal trading. Above 31, it's pretty much hardship, guys. That's hardship, called entering the gates of hell, right? Above 40, like you are in the lower recesses of hell, okay? Like above 40, like we're dying on the charts, man. We're dying, okay? Just really bad trade. So we're in a good spot right now. We're kind of in this like heavenly zone, and you guys can see it. We're so bullish. We're so bullish. What we would like to happen is to break it down here and just enter heaven. If we could just enter heaven, yeah, I mean that is going to be just an amazing summer rally, guys. But you can see our trend line. If we deflect back up and start approaching the gates of hell, things can get rough. The charts can turn around. You're going to want to watch where the VIX bounces from. We're at a critical moment. This next week is going to determine it, guys. Don't get over bullish. Don't be a perma bull and don't be a perma bear. Be an alpha monkey, guys. I'm telling you, be an alpha monkey. Don't be bullish and don't be bearish. Just be an alpha monkey. Be an intelligent, clever monkey. Okay. You guys know the monkeys are the symbol of cleverness and intelligence. Okay. That's why I picked a monkey. I didn't pick a dumb ape. Right. Don't be a dumb ape, right? These apes that just ape in, right, with everything that has the name moon in front of it, right? They get suckered in by like armies of BS. Who cares about coin armies? Screw coin armies, right? Screw Michael Saylor. Screw all of these dumb apes, man. Okay? Be a clever alpha monkey. Okay? Use your intelligence. Use your human intelligence, and don't just go with the herd, right? Like all the apes and all the moon whales and all those weirdos, right? The gurus and the shillers and all that stuff. Be an alpha monkey. We're doing good. We're not like getting, 500% gains overnight. I'm sorry. I'm not I don't take that much risk. We're getting 10% regularly on the trades that we're doing. We're getting 10% to 30% regularly on the trades that we're doing. And sometimes we're making little mistakes, but overall, we're doing pretty good. Okay? And we're improving, continuously improving. That's what this show is about. That's what this channel is about. I'm going to look back in 3 years and I'm going to just cringe at the stuff that I was originally doing on the first episodes of this show. But together, again, with my friends in AR Collective and my friends in Alpha Commission, right? And then others that I just talked to on the sides, like we are just improving and improving, right? And so hopefully, like we are just going to be killing it. We are going to be killing it, right? In the next bull run. And all of this is practice. We should feel blessed for the bear market because it gives us the time to practice and improve, right? As continuous learners, as, clever alpha monkeys, right? Okay, guys, so that's the VIX. Pay strong attention to where it goes. And then the other thing that we have to pay attention to is the dollar. The dollar is doing something interesting. It is violating that curve that I made, right? You see this? It's just always climbed up this curve, and for the first time, it's really breaking down from that curve. Now we also have this diagonal. Let me get rid of these EMAs. Right, we also have this diagonal, which it's climbing up on. And so we shouldn't be too excited until this diagonal is broken. But the fact that it's breaking this curve should give us a little confidence. And if it can break this yellow line, then it should give us a lot of confidence. Maybe it's going to come down here to 103. But if it starts to bounce up or if it re-enters this curve, then we're going to have some hardship. Okay, so just be aware. If we kind of recapture 106, we could have some hardship, guys. All right, it might work its way back up to 108 or even higher. So again, next week is going to determine how the VIX bounces. Does it break down to heaven or does it bounce up to hell? Because the VIX is opposite of what you would expect. Down is good, up is bad. And same thing with the dollar. Down is good, up is bad for the dollar. It's just for our trading. Like we're trading against these things, right? And then for USDT, we don't want it to be holding this line. We don't want it to recapture this line and pump up to 6.5. We want it to break down from that 6.15 that I was suggesting, right? Remember, this was what I was targeting, 6.15. I was targeting it from back here. We got that goal and we got very nice trading during that period while it was falling. So also USDT. If USDT is falling, that's good for our trading. And so what we want to see is it to fall down to like 5.3, right? Or at least 5.7. If we can fall from where we are to 5.7, that'd be a nice trading time. But if we bounce back up, if we rehold this level above 6.2, that's not good. That's not good. That means we're probably going to explore the top again. We want to keep breaking down. Then we're going to have a little relief rally, a little bull run during the summer, right? At least until maybe September. But it can all flip around on us, guys. So watch the USDT, DXY, and the VIX. Okay, VIX. If we go over to let's go over to stocks really quick. You can see some potential limits on where we could pump. We do have this overall trend line. And guys, I drew this like when we were back here, just as a suggestive guideline. I haven't done anything with the Dow Jones in like a month or whatever, like weeks and weeks. And so look, it's just like carving out that channel that I suggested that we would pump through. Again, I was bullish back here when everyone was being super bearish. I said, guys, it's time to flip around. We've got so many of these like CME gaps, like we have to fill them. And look, they've just been filled one by one by one. I mean, I even need to update these things, right? Because there's been neglecting this chart. So we filled that one. Right, that one obviously was filled. This one got filled. This one was a 6-hour one, but that could be a potential target. I don't know if we'll have like some spike up to here. I don't think that's really possible, but if we're super bullish, I mean, hey, who knows? But I would just expect more for us to top out in this area. And in fact, we're getting into a pretty toppy area, right? I mean, you can see we have a lot of resistance. We have a lot of resistance in here. You can see bounce, 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 right? Like this could be pretty solid resistance, But we also have this area and this area, and this wick right here. So that could send us down for a while. Like we could be in an area where we get shot down and then make another go, right? So again, just be aware, like this is Look how this is like vertical, guys. Like this is a vertical pop-up. Like at some point we're going to get smacked down. Even if we make another attempt, we're going to get smacked down. And so just be aware there could be a pullback coming up. The VIX, the dollar, USDT, and stocks all are going to have decisive moments at the end of the month. And you know, we can't be 100% sure how it's going to go. You know, I thought we were going to go a little bit more sideways before we reach this level, but we've just been going like vertical. But check that out. I mean, this was the buy zone for the Nas 100 that I suggested, and this is the sell zone. And look, like we hit those targets perfectly. Boom, boom, guys, just boom. Like, we did it. We killed it. Remember this 5-wave theory that I was making, right? Man, we are just knocking it out of the park. Like we are doing so good, Alpha Found. Like so good. Okay. You should be proud if you stuck with all of this during the bear market. Like you're doing a good job. Don't worry about missing some trades. Like you are just developing the skills necessary to kill it in the next bull market. Just the regular Nasdaq. I was mentioning it looked like we were forming this accumulation wedge, and what happened? We broke out of it. A little bit of a fake out, suggesting we might break down, but you know, we actually held on to it, and then boom, right? We're doing the measured move. And so again, there might be this limit at like 323, who knows? Maybe even a spike higher, who knows? But if we do break out of that, it's going to be extremely exciting for the markets. Why do I suggest that we could potentially break out of that? Wow, because the Russell is actually breaking out of its downtrend. That's very strange. I wouldn't really have expected that. And if the Russell is doing it, maybe the others are going to do it as well. The Russell not only reached its target, but it's busting out of it. Now, understandable why. There's a lot more resistance like in this area. And so maybe this is a turnaround zone right here for the Russell. You can see we also have this wick over here. Right? So this kind of zone, like the Russell may just be kind of faking out, breaking out of this macro, and just maybe faking out. But let's see, because this might be an interesting indication. Like if the Russell breaks out of this macro downtrend and then holds on support, like let's say it just gets a little bit of a retrace, holds on support, and then keeps going, wow, that's going to be an interesting signal for the markets. But S&P and Nasdaq aren't even close to that. You can see S&P and Nasdaq like aren't even close to theirs, so they still have a ways to go. Definitely coming into some resistance, so we could get a pullback at any time. All right, guys, just trying to show you like how all of that stuff fits together. Our ETH dominance, getting a little bit of a pullback here. Didn't really break back into its channel or anything. So again, my concern would be that ETH could be ready to dump back down, and maybe it's just going to continue. Maybe this is just a lower high on its dominance, and it's going to move back down, and other coins are going to displace it again. This is dominance. This isn't ETH. This is ETH dominance. It's percentage of the market, right? And so look at this perfect retest of. Look at that. I told you guys it was going to make a beeline for that. It was just going to it was going to retest this. And then you see how this is kind of like the opposite of this. So the fear for ETH lovers would be that it breaks back down, just like it popped up and came down, and then it like popped back up, right? Like it could pop back down again. So just be aware. Just be aware. Like the market may be changing. Like we were pretty ETH centric. Maybe we're going to be other coin centric next. That could be great for other altcoins. It could be good for Bitcoin. Bitcoin's dominance, pretty much doing what I expected. Pretty much doing what I expected. We did have this trend back here. I made an entire video about a concept and a theory that I had for Bitcoin's dominance, and you can see like we got like a very similar situation going on here. Where let me take this. Let me take this red one. And I believe it's been a while since I looked at this, but I believe anyway, it might be something like this. Might be something like this. Okay. And so we might be at this kind of like breakdown, temporary breakdown before Bitcoin catches back up. If we just take an analogy from the previous bear market era, like we may be at this point where Bitcoin just breaks down off of this kind of trend to the upside, but that it should recapture its trend. And this is just a theory of mine, okay? Like, don't take this with a grain of salt. But Bitcoin could have its pump soon. Like this breakdown shouldn't last forever. But it's not over yet. Okay, I think that's going to be it. Let's just go quickly back to Bitcoin to see if it's doing anything interesting on the 1 hour. And nothing too interesting right now. There is this kind, you see how we had this kind of measured move here? It's not really a head and shoulders. It's more like it's an ascending broadening wedge, okay? And so the measured move is to the basically the breakout of the wedge itself. And then that's what we got. Like we reached that point exactly. So if we have another ascending broadening wedge right here, even though we had this kind of fake out to the upside, potentially we could come down, just conservatively, if you see it as a head and shoulders, we could come down here. If you think of it more as the wedge, then we could come down here. Basically this breakout point, which would be along support. See this white line, I don't have to mark it out. The white line already marks it out, or this white zone. So that would be 21,500-ish, maybe 22,000, somewhere in this zone. But to maintain bullishness, we already talked, we should probably stay above this blue line. So hopefully we only retrace this much. But just be aware, guys, like we could be getting into a point where, either we have one more pop up and then a turnaround, or maybe we start to turn around now. So again, like this zone is where you should have taken profits, or at least where I would have. Okay, at least where I would have, because that would follow our principles. Let me get out of log. There we go. All right, that was your alpha for the day. Stay safe and happy trading.